Today, we're going to totally change how you look at your business expenses. Seriously, we're not just talking about boring tax compliance. We're talking about using your expenses as a powerful strategy to actually fuel your company's growth right here in Malaysia. So let's dive right in.
So let me just ask you straight up, are you leaving money on the table? Because, that's exactly what's happening when you don't fully get a handle on your allowable expenses. This isn't just about cutting a check to the tax man. It's about strategically putting money back into your company's future.
To make that happen, you're going to need a playbook, a simple, clear strategy for spotting every single legitimate deduction you can claim. And we're going to build that playbook together, right now, starting with the most basic, fundamental tool you've got. I want you to picture all these tax rules as a toolkit, okay? Some tools are for your everyday jobs, and others, well, they're for the really specialized tasks. The very first tool that every single person needs to master is like the basic all-purpose wrench of tax deductions. It's the one you'll be reaching for every single day. And that brings us to the most important rule in your entire toolkit. This is the big one. It's the rule that governs pretty much every business expense you can possibly think of. It's what we call the general deduction rule, and you'll find it in Section 33, subsection 1 of the Income Tax Act.
Now, I know that sounds like a whole lot of legal jargon, right? But what it really boils down to is pretty simple. If you spent money specifically to earn your business income, chances are you can deduct it. This is the foundation, the bedrock that all other deductions are built on. So to figure out if an expense qualifies, you just have to run it through 3 quick tests. First, was it spent wholly for the business? Second, was it exclusively for the business with zero personal benefit mixed in? And third, was it incurred directly in the process of making money? If you can nod your head and say yes to all 3, you're in good shape.
And this makes the difference crystal clear. Things like office rent and staff salaries, for sure, they pass those 3 tests with flying colors. But renovating your home, even if you do some work there, nope, that has a personal benefit, so it fails. It's the same deal with buying a big piece of machinery. That's considered a capital asset, a long-term investment, not a daily running cost. So it's treated totally differently under the rules.
Okay, so you've mastered the basic tool. You get it. Now, let's add some more interesting things to your toolkit. We're moving on to the specific deductions under Section 34, subsection 2. This is where it starts to get really good. So if Section 33 is your everyday wrench, think of these as the power tools. The government has literally created these specific deductions to encourage businesses like yours to do things that benefit everyone, not just your bottom line, but also your employees and the whole economy. What's really cool here is you can see the logic behind it, right? We're talking about your contributions to EPF and SOXO, spending on R&D, and paying for staff training. The government is basically saying, hey, if you invest in your people and in the future of your business, we're going to give you a specific tax break for it. It's a total win-win.
And now, we get to the most exciting part of the entire toolkit. These aren't just power tools, my friend. These are the highly specialized, high-impact instruments that can literally transform your business. We're talking about the super deductions under Section 34, subsection 6.
The purpose here couldn't be clearer. This is strategic economic policy in action. These incentives are specifically designed to steer businesses towards activities that line up with what the country is trying to achieve. We're talking tech, sustainability, and making Malaysia a real player on the global stage.
And just look at these examples. We're not talking about small-time expenses here. These are high-value, game-changing activities. Pioneering new research, breaking into new export markets, investing in green technology. For an SME, this could mean a massive digital upgrade. The government is actively rewarding businesses for being ambitious and thinking ahead. So, what makes them super? It's the mind-blowing potential for a double deduction. Just let that sink in for a second. For every single ringgit you spend on one of these approved activities, you might get to deduct 2 ringgit from your taxable income. This is a huge financial advantage that can free up some serious cash.
But, and this is a big but, here's the crucial point. You can't just go and claim these. These super deductions are not automatic. They absolutely require pre-approval from government bodies like MITA or HRD Corp. You have to check the official rules and get all your paperwork in order first. Don't skip this step.
All right, theory is great, but let's see how this stuff actually works. We've laid out all the tools in our kit. Now let's put them to work and see how this all comes together in a real-world business scenario.
So as a quick refresher, here's our toolkit. Section 33, that's your general rule for everyday costs. Section 34.2 is for those specific government-encouraged expenses like taking care of your employees. And Section 34.6, that's for the special minister-approved incentives with those incredible double deductions. Okay, let's look at this company, XYZ Manufacturing. Follow along with me. Their salaries of 200,000 ringgit, that's a standard business cost, allowable under the General Rule Section 33. The EPF contributions of 26,000, that's a specific deduction under Section 34.2. But here's the game changer. That 50,000 ringgit they spent on an approved trade fair, that qualifies for a double deduction. That means they get to deduct 100,000 ringgit. And notice the machinery purchase? That's not deducted here. It's handled through capital allowance, spreading the cost out over a few years. So, as we wrap things up, let's boil all of this down into one final super useful checklist that you can use for your own business strategy. Okay, if you remember anything, remember these key principles. The expense has to be real. Money actually spent, not just a plan. It has to be a running cost, not a big capital purchase. Your foundation for everything is that wholly and exclusively rule. Use Section 34.2 for your team's welfare and development, and definitely look into the powerful incentives in Section 34.6. But always get that prior approval and check the latest rules. And that just leaves us with one final thought to chew on. Take a good look at your business plan for next year. Are you planning to expand overseas, upskill your team, or maybe invest in green tech? If you are, which one of these powerful super deductions could you be unlocking to help make it happen? Now that is a question we're thinking about.